print, GST special, all week, only on Bloomberg Quint.
Good morning, you're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's look at the headlines this morning. Asian stocks are off to a muted start. They're likely to record their worst quarterly returns in over 3 years. Accenture beats consensus estimates in its quarterly performance, also raises revenue growth guidance to 9.5 to 10% from the earlier 7 to 9%. Titan will be in focus in today's session after Rakesh Jhunjhunwala and his associates cut stake in the company by 1.4% over the last 1 month. And the country's largest mutual fund, HDFC Mutual Fund, has received the nod from market regulator SEBI to float an IPO. Quick check on Wall Street. It staged an impressive comeback on Thursday, lifted by telecom and technology stocks, while financials ended a record losing streak. Bloomberg's Sue Keenan wraps up all the action on Wall Street in this report.
The U.S. stock market rose the most in 3 weeks in the Thursday session, with tech in the lead, oil higher, gold lower, and bonds fell with the dollar. It was a day in which, for the first time in a while, there was no heavy talk of trade wars, and a lot of strategists had said the lack of tweets from President Trump, the lack of any signals that have been conflicting coming from the White House allowed stocks to move higher. Again, tech was in the lead, a very badly beaten sector of late. We also saw pharmaceutical companies under significant pressure. Amazon.com, which has been acknowledged as a major giant in the retailing world, announced the purchase of an online pharmaceutical company. And so pharmaceutical retail brick and mortar chains such as CVS and Walgreens Boots Alliance, recently added to the Dow, plunged as much as 10%. We also saw the bank stocks for the first time in 14 days in the green. We've been talking about how this sector has been down 13 straight sessions, an unprecedented decline that has a lot to do with concern about lower yields. We've seen yields in the bonds below 3% for such time now. These stocks finally were in the green, but as a side note, the ETFs that invest in these banks have noticed a big departure of investors on concerns about their profitability. In oil, we saw oil surge above $74 and remained above $73 by the close. This has a lot to do with the U.S. pressure on allies to restrict imports of Iranian oil. I'm Sue Keenan in New York for Bloomberg.
Well, I was just having a look at the Asian markets. The 3 early risers, of course, the one in Japan, in South Korea and in Australia, had begun the session in the red. It seems that trend more or less continues, with the Nikkei and the Kospi both trading clearly in the red, but the Australian benchmark has sort of recovered some of those small losses that it had in the early part of the session. China's just about opened up a few minutes back, so it's not really the best time to give you a sense of where this market is heading. All the same, it has opened with a few ticks in the green, so we'll have to watch and wait as to how the China market pans out, and of course the Indian market. But before we do, let's take a look at the last few months. Currencies, stocks and bonds in developing nations are closing out their worst quarter since 2015 and are facing a looming trade war, tightening US monetary policy and a weaker global outlook on growth. Does this present a buying opportunity, or does it mean to stay clear? Bloomberg's Srinivasan Sivabalan has this report.
It looks like it's a tumultuous first half, doesn't it? But if you really put it in context and go long term and really see what emerging market stocks do typically, this is an asset class that's riskier and that's more volatile, and a 15, 16, 17% move is not really unusual. You see, during the euro area debt crisis, during the taper tantrum, during the oil price crash in 2014, we dropped about 15, 16, 17%, but then bounced back very strongly. What it shows is that some reasonable bad news can push emerging market stocks down 17–18%, but it really takes very bad news to push it beyond 20%. So it could be argued that we are at a stage where we could even rebound if there is no further bad news. You see, this was when the US was downgraded in 2011 by S&P, and this was in 2015 when China the Chinese stock bubble burst. Except for those two occasions in the last 10 years since the financial crisis, we have always rebounded after 17–18%. That's the context we have to use to look at this current sell-off. This is par for the course. This is not abnormal at all.
You've had a chance to look at the valuations in quite a bit of detail. How do they hold up longer term then, and when you compare them especially to some of the global peers?
Yes, we went through a $8 trillion rally for 2 years through January 26, 2018, and that probably made some people think that valuations have gone high. But if you really look at long-term PE, which is, we call it the Shiller PE because it was developed by Robert Shiller of Yale University, this looks at price as a multiple of earnings over the past 10 years adjusted for inflation. If you look at that PE and compare it with US markets, we are near the lowest valuation in 15 years. I mean, that's a compelling argument for a value buyer. The rally has not even taken the valuation to our long-term average. We are at a very low level. So that is an argument that value buyers are making to say that this sell-off has actually opened up a buying opportunity.
All right. Well, that's how it looks essentially in Asia, and that's the trend that has been for the last quarter or so in emerging markets that, of course, Mr. Shivabalan was talking about. And we'll have to see whether or not we've bottomed out from this point. But clearly, there has been a general flow of bad news from the US and from other parts of the world as well. But as of now, we're dealing with the end of the week. Let's go to Darshan Mehta, who's here to tell us how it's looking for the Indian market at the end of the week.
Yeah, so basically at this point of time, if you're looking at most of the Asian cues, they are slightly negative in trade. Let's first take a look at how, the ADRs have panned out in trade. So we'll get a sense. The ADRs were down in trade. ICICI Bank, Tata Motors, both of them down close to 2–2.5% in trade. Wipro and Vedanta were the other two counters which traded with a negative bias. Infosys managed to rally significantly based on how the currency is panning out in trade. Dr. Reddy's again will be in focus because one of their key drugs that they wanted to launch has been delayed by another 14 days. So Dr. Reddy's will be in focus. Now, as far as individual sectors are concerned, the Nifty was down almost 82 points in trade yesterday. So at the 10,589 mark in trade, the mid cap and small cap saw much more selling that came in, so significant amount of selling in the broader markets. The Nifty Bank and Nifty PSU Bank also was weak. The PSU Bank was weak. The Nifty was down 0.4%. Now, if you're looking at how the sectors that perform, metal pretty much was the only sector that managed to inch up in trade. It was flat in trade, but real estate continues to bleed. The oil sector continues to bleed given the fact how the oil marketing companies and Reliance are behaving currently. Now, if you're looking at what's happened this month itself, Nifty Pharma's up 11%, Nifty IT is up 1.5%, and both of them are related to how the dollar has been moving. But look at the broader universe, the infra, real estate, small cap, the high beta, they've been taken to the cleaners this month itself. If you take this week only in the fast 4 trading session, Nifty IT is the only one that managed to gain. It was up almost 0.7%. But look at the cuts that have come in. Real estate, PSU banks and energy down almost anywhere between 6 to 7%. So weakness clearly been seen on the counter. At 52-week high, the number of stocks actually has come down significantly. Dabur, Godrej Consumer, Infosys and Mphasis. The list is endless for the stocks on the 52-week low, so we haven't taken it at this point of time. FIs almost 950 crores of net selling. DIs have bought in almost 442 crores. Again, 3,600 crores of selling, and DIs have been buying in the market. They bought in almost 11,800 crores, and that is keeping the market afloat. Now, if you're looking at The Wix was up almost 3% given the fact that, the Nifty was rather weak in trade yesterday. Apart from it, if you're looking at the contribution, the Nifty was down 82 points. Main contributors again contributing: Reliance, ICICI Bank and HDFC. Surprisingly, Tech Mahindra features among the losing rate. And again, HDFC Bank managed to hold on. If HDFC Bank was not there, you could have seen much more selling pressure on the Nifty even in trade. Now, it was expiry yesterday. The Nifty rollovers were weak this time around. So Nifty rollovers were at 64%, something much lower than what it was. Rollover simply not happening. Similar was the case with the Nifty Bank. The Nifty and the Bank Nifty, both of them ended down in trade. Now, if you're looking at where positions were taken, this is where positions are taken. 10,600 and 10,700 is where call writers are extremely aggressive. And as far as put writers, they are writing in at levels of 10,500 in trade. Now, if you're looking at what the open interest build-up is for the entire, if you're looking at the total open interest build-up, basically 10,700, 10,800 seems to be the big resistance for the market, and the put writing activity is now at 10,500 mark in trade. Now, if you're looking at the Nifty PCR, that moved up from levels of 1.33 to 1.43, given the fact that there are rollovers and the series change. Nifty Bank PCR was at the same level. Some of the counters in focus: Titans saw fresh shorts yesterday. The counter was down almost 4%. Again, will be in focus because of the big block deal that happened. The other counter is India Bulls Housing Finance, which saw significant amount of weakness that came in. Apart from it, if you're looking at the other stock, Jain Irrigation has been not doing well. It was down another 10% in trade. And the final stock I want to talk about is Shriram Transport, which after a rally seems to have lost its sheen. It was down 5% in trade.
All right, thanks so much, Darshan, for that outlook on how we're likely to end the week in the equity markets. But clearly, also yesterday and today, we're going to be focusing on the currency space, because yesterday the Indian rupee touched an all-time low. Going across to Saloni Dhanuka now for an update on the rupee and the bond market. What's in store, Saloni? What are you picking up? Morning.
Good morning, Alex. So the rupee, as you mentioned, continued its free fall for the fourth consecutive session yesterday, and it ended and it did breach the crucial 69 per dollar mark yesterday in the early trade after what we have seen the central bank intervention to defend the currency movement. Now, the home currency ended at an all-time low of 68.79 levels against the dollar, showing a 18 paise fall largely due to rising crude oil prices, trade war fears between US and China, along with a sharp sell-off in the Chinese currency, largely weighed on the rupee. Well, rupee, which is the worst performing currency in the Asian market so far this year, has fallen approximately more than 8%. Well, speaking of the bond market, sovereign bonds declined for the fifth consecutive session yesterday, as yield on the 10-year benchmark security ended 6 basis points higher at 7.94%. Well, in terms of flows into debt market, global funds increased their rupee debt holdings for the third consecutive session yesterday. Now, that's according to NSDL data. On the global front, dollar ended steady near 95.30 levels yesterday after US economic data showed the economy expanded at a slower than expected rate in the first quarter of the year. The US GDP grew at 2% at an annual rate from January to March quarter, which is lower than the expectations of 2.2%. Elsewhere, euro slipped 0.1% against the dollar, while euro rose 0.1% against the dollar, while the pound slipped 0.3% against the dollar after Bank of England chief economist commented that the current wage growth rate is warrant for a near-term rate hike by the bank. And lastly, speaking of the dollar rupee, now it is trading at 68.84 levels against the dollar in the non-deliverable forward markets, which is 5 paise weaker than yesterday's closing level. So we may see rupee weakening in the early Asian hours today, Alex.
All right, and that's going to be a double whammy, considering the fact that crude is also showing signs of rising. Thanks so much for that, Saloni. We're heading straight into a conversation about commodities now. Jayesh Khilnani is here to tell you all about that. Jayesh, starting obviously with the headline of crude, 3.5-year high now.
That's right, Alex. In fact, overnight we did see a 1% surge for the WTI prices, and with that it managed to clock a 3.5-year high on closing basis. However, if you look at early morning trade, we are seeing some bit of softness come about Now, a couple of factors playing out over here is that the US stock decline or the inventory decline that we reported yesterday, that has added to the supply concerns. Also, we are seeing some bit of softness in the dollar prices, which have pushed the crude oil prices on the higher side. And now if you look at the base metal space, the index itself closed about 0.8% in the red. All the base metals except for zinc closed lower on LME. Now copper futures declined for a second straight day, and this metal is now set up for a third straight weekly drop and a fifth monthly drop this year. So watch out for copper prices. The zinc market is likely to be in deficit mode on account of the demand supply concerns, that is as per a BMI research study note. We had other base metals like copper, lead and tin which declined more than 1% on LME. Aluminium declined nearly 1% and it snapped its 2 days gaining streak, and we had zinc which closed higher for second day in a row. Now if you look at the Shanghai Futures Exchange, the base metals are in fact trading with a mild bit of negative bias, but Shanghai Steel, that has in fact bucked the trend and surged about 1% or so. Also, if you look at the precious metal space, COMEX gold is now trading below the key 1250 mark as the dollar has in fact gained for 3 days in a row.
All right, thanks so much for that, Jayesh. Now on to a conversation about a stock that's likely to be in focus today after it emerged, and we're talking about Titan here because it emerged that Rakesh Jhunjhunwala and his associates have cut stake in a company that has been at the forefront of his conversations across the board. We're going to Agam Vakil now to understand what this means for the company and why possibly this decision was taken.
Sure, Alex. So firstly, let's come down to the fact that Rakesh Jhunjhunwala and his associate companies have sold around 1.25 crore shares in Titan Company. This comes to roughly 1.4% stake, and after the sell that was carried out between the 22nd of May to the 27th of June, the stake now falls to as much as 7.37%, and this is the lowest that Rakesh Jhunjhunwala along with his associate companies have held since 2007. Now, again, when it comes to this particular stake sale that's currently valued at around nearly 1100 crores, and through the period of 2007 till now, that is the data that's available for us. Well, the Titan Company has actually gained as much as nearly 17 times. So it has certainly given him a substantial amount, substantial returns. And we're going to have to wait and watch whether or not he will eventually, plow back some of the stake that he has sold in Titan Company.
All right, thanks so much for that, Agam. We'll stick with that stock, of course, over the course of the day, and we'll tell you how that's panning out. Let's move on now and speak about the IT space. Accenture's third quarter revenue has beaten estimates, with its digital vertical contributing 60% to its top line in the last 3 months. The global consulting and outsourcing giant has also hiked its revenue guidance from the earlier 7 to 9% to now 9.5 to 10%. On to one of the top stories we have on the website. One bank guarantee issued every 2 days for about 7 years, a web of 35 companies in at least 3 nations, and 24,000 crore rupees worth of loans. That's how India's biggest banking fraud unfolded, according to the Enforcement Directorate's charge sheet against jeweler Nirav Modi. Charlene D'Souza, who's gone through that very bulky charge sheet, has all the details.
The charge sheet shows that Punjab National Bank allegedly issued 1,206 LOUs over a period of 7 years. That is between 2011 and 2017. Nirav Modi's firms is said to have borrowed approximately rupees 24,000 crores in that time. The charge sheet states that approximately rupees 18,000 crore has been paid and approximately rupees 6,300 crores remains as the outstanding amount.
And this charge sheet also has very interesting details about how the books of the companies that were owned by Nirav Modi were inflated to keep the LOU gravy train going. Charlene has more details on that.
Nirav Modi companies imported and exported the same set of jewelry to Hong Kong from India and Dubai. And the stones were then dismounted and then they were exported back to India. This helped create huge outstandings in the books of account of dummy companies against the Indian companies. The funds were then diverted from Hong Kong to other countries.
All right, so I think it's been about enough time for the Chinese markets to have settled down into the initial trade. We were talking about the fact that Asia is set for probably one of its worst quarters in the recent past. You have the Nikkei that's still down about 0.3%. You have Sydney that's, or the Australian benchmark that's more or less settled down into its more or less 0.1% drop. You have a Shanghai that slipped into the red, but you also have the other benchmark that's trading in the green by about 0.3%. Hang Seng, of course, trading about 0.2 in the green as of now. So there's not enough a sense as to how the Indian market will pan out over the course of the day, and we'll have to watch how the rupee trades in today's session as well, considering that it hit its all-time low yesterday. But what are the stocks in news? What are the stocks that you have to watch out for? Nikki Mirchandani is here with a list to tell you about. Nikki, over to you.
Thank you, Alex. First, I'm going to start off with Kalpataru Power Transmission, which has received multiple order worth around 1,235 odd crores. Also, we have Nugent Software, which has bagged an order to the tune of around 64 crore. That's a small side relatively that we're looking at. Bharat Financial Inclusion Company has completed the first securitization transaction of around 550 odd crore in FY19. And also, we are tracking Bang Overseas, which is expected to sell the Bangalore land for 20 odd crore. Looks to be a big amount given that the market capitalization of the company is around 65 to 70 odd crore. Dr. Reddy is also expected to be in focus given the launch of Zubexon has been delayed by 14 days. Now, this is a drug which is used to treat adults with addiction. Also, we have Fortis Healthcare, which is again, delayed the submission date till the audited results come in. Also, in bulk deals that we are tracking this morning, Manpasan Beverages, where Nomura India has sold in 1.1% stake in the counter for a sum of around 18 odd crore. ICRA, where IIFL Management Services has bought in 3.3% stake. And on the selling side, we have Punjab National Bank, which has sold in the shares of the company at a price of around 3,291 per share, with sums to a consideration of around 109 odd crore. Also, we'd be keeping an eye on Unipa Industries, where Arvind Khattar has bought in more than 2.5% equity in the company. And on the selling side, we have Premier Investment Fund, which is also sold in the shares for a sum of around 76 per share.
All right, thanks, Nikki, for that. Let's move on now and speak about the big brokerage calls of the day. Somit Sarkar is here with a couple to tell you about. Somit, morning.
Good morning, Alex. On the big brokerage calls for the day, first we have is Macquarie on the graphite electrode sector. Now, according to the brokerage, the demand uplift in graphite electrode is structural and not just an upcycle. With stable steel production and limited capacity addition, the demand for graphite electrode should sustain, according to the brokerage. Now, the prices of needle coke, which is a key raw material for this electrode makers, is expected to remain firm going forward, says the brokerage. Now, the brokerage is also expecting the graphite electrode prices to stay strong for the next 3 years on the back of limited capacity addition, technology, capital and raw material constraints. On the back on the utilization side, it says that for Indian players, the utilization levels should go on rising on the back of healthy demand and limited supply. Now, 2 Indian electrode makers have a market share of close to 22% in the global market, and for Graphite India, they have initiated a coverage with an outperform rating and a target price of 1,260, which suggests a potential upside of close to 60%, and they're expecting the volume growth to be around 4% annually over FY19 to FY21 for Graphite India. And for HEG, they have initiated coverage with an outperform rating and a target price of 4,810, which suggests a potential upside of close to 58%, and they're expecting the company's volume to grow at a compounded annual growth rate of 5% over FY19 to FY21.
Thanks so much for that, Somit. Now, you may have heard of reports of women starting to drive in Saudi and all the reforms that have been taking place over there. And the man behind it, he's known as Mr. Everything for his deep influence in all aspects of Saudi Arabia. Crown Prince Mohammed bin Salman is changing his country even before he takes the throne. Bloomberg Profiles takes a closer look at the powerful young prince.
Mohammed bin Salman, also known as MBS, hasn't always been in line for the Saudi throne. For decades, the throne has been passed from elderly brother to a slightly less elderly brother, all sons of the founder of Saudi Arabia. But MBS is set to buck that trend.
His relationship with his father has put him in a position that has allowed him to leapfrog other members of his immediate family because of the trust that his father seemingly has in him.
That close bond was years in the making. Unlike his brothers, the prince was educated in Saudi Arabia.
He was by his father's side through most of his childhood, and so he understands how the royal family works from an insider's playbook.
A few years after graduating from King Saud University, the prince went to work for his father, then the governor of Riyadh. In 2011, his father was named defense minister, but MBS was initially barred from entering the ministry because of rumors that he was disruptive and power-hungry. Gradually, the prince worked his way back into the then king's good graces, and he was assigned to Ministry of Defense, where he brought in Western consulting firms to streamline bureaucratic inefficiencies. In 2015, his father became king and gave his favorite son unprecedented control over the majority of government. The prince became known as Mr. Everything. Finally, in the summer of 2017, the king named him Crown Prince, the first in line, bypassing his uncle, one of many older and more experienced statesmen.
He would describe himself as the first Saudi leader of this stature raised in the internet age, and someone who grew up playing video games.
Peter Waldman writes about the Middle East and interviewed the prince for Business Week.
He compares himself to the Silicon Valley entrepreneurs and says, I'm going to take my state in a kind of visionary direction.
In 2016, the prince launched Vision 2030, his plan to transform Saudi Arabia by weaning the nation off of oil and liberalizing society.
He's lifted the prohibition on women driving. He's introduced public entertainment, such as concerts, and he's allowed cinemas to open.
The prince also plans to fulfill what he calls different dreams for a post-carbon future. A major piece of that plan is to sell shares in the state-owned oil company, Saudi Aramco, which could create the biggest IPO in history.
The reaction to the Aramco IPO has been one of enthusiasm and I think a bit of shock, depending on where you're looking at it.
For years, the kingdom has relied on petroleum for 90% of the state budget, almost all of its export earnings, and more than half of its gross domestic product.
They brought in huge oil revenues and spent it for their own survival as a royal family in terms of subsidizing lifestyles among Saudis so they wouldn't push back against this very autocratic family.
The collapse of oil prices from $140 a barrel to the 30s in 2016 caused the IMF to declare that the country would be bankrupt by 2020 if it carried on spending as much as it does.
What this 32-year-old prince has said very clearly is we can no longer rely on oil to fund our lifestyles. We have to begin to contribute on a personal level to work, to be entrepreneurial, to find investments, to find businesses like a normal state.
The Crown Prince introduced taxes, slashed handouts, and is trying to make Saudis actually pay for the energy they consume. The prince also heads an anti-corruption commission, and in the fall of 2017, he carried out an unprecedented purge of the Saudi elite, arresting 4 ministers, 11 princes, and countless businessmen. Most were freed after returning what were alleged to be ill-gotten gains.
By taking on his cousins in the royal family, he's sending a signal that he is dead serious about changing the Saudi system. However, it has not applied to himself thus far. And I think his own personal excesses undermine the signal he's trying to send.
While his approach may seem unforgiving, MBS is shaping the Middle East in ways no one could really have ever imagined. And being so young, he's likely to hold power for over a half-century, meaning there will be continuity of government, but without the checks and balances needed to prevent a dictatorship.
Saudi Arabia is a police state from top to bottom, and it will continue to be for the foreseeable future.
All right, that's the end of this particular edition of Daybreak, but there's a lot more over the course of the day that you can watch right here on Bloomberg Quint Live. Thanks so much for watching.